Back to another Queer Money follow-up. This is episode 49. You might notice that we're doing this a little bit later than normal, and that's because there has been an ungodly amount of construction going on in this building today.
All sorts of noise. Literally, there was a grinder grinding concrete in the building from like maybe 10 o'clock until about 20 minutes ago.
And I thought it was either above the floor above us or below us, but apparently it was
seven floors above us.
7 floors above us.
Yeah, exactly.
Good Lord. So we're hoping that they're supposed to be done by now. We're hoping that that's true. So we can actually cover this and stay with our commitment of having an individual Queer Money follow-up every single day. So today, our question for you is, what's the last expense that you cut? Now think about it. What is the last thing you just said? I'm cutting this out. I'm done. Finito, bonito, no more.
Or even cut by a percentage, right? What is one of your expenses? You said, you know what? I just spend too much money on this. I can cut it.
Dial it back, girlfriend.
Right.
What would we say? We didn't talk about this before. What would we say was the last thing that we cut or cut back significantly?
Well, when we did Dry January, I think that was a momentary cut for us, right? Mm-hmm. We cut out probably between alcohol that we bring into the house and alcohol that we purchase when we're dining out, because we started going to places where we wouldn't be tempted to tempted to purchase a drink. We changed the places that we went to. Our food and our dining out and our drinking budget probably dropped by about $300 to $350.
And so far, we've done a pretty decent job of not going back to our alcohol and dining out spending from December.
Right.
Because that was a little obscene.
Yeah.
So this is Crib Money follow-up episode number 49, covering Crib Money podcast episode number 49, titled 17 Semi-Hard Ways to Keep More of Your Money. We're trying to be a little bit playful there, so I'm not sure if we scored on that. But that particular episode has sort of evolved. So definitely go back and listen to episode 49. Then we would also encourage you to go check out, go to debtfreeguys.com and search on debtfreeguys.com, find extra money. And the reason that we suggest that is because since this podcast published 4.5 some years ago, we've added to that another 12 ways, semi-hard, somewhat easy ways to save money. And the idea with this is to not necessarily like cut back drastically, but what are some things that you can do, some small modifications that you can make, some things that people don't often think of to save a little money. And while each one of these changes might only save you, $5, $10 a month, the combination of doing several of them could save you, maybe $50 up to $100 a month, which is, could be up to $1,200 a year, which is $1,200 a year is a somewhat decent vacation if you're somewhat economical, or it's a nice chunk of debt wiped away.
Yeah. So this the episode 49 in cutting expenses was prompted by a discussion that I had, an email exchange I had with someone, and some follow up after that. Someone reached out to us. A gentleman had reached out to us. He actually reached out to me first through Facebook and friended me on Facebook, and then emailed us at debtfreeguys.com and proceeded to explain to us his desperate financial situation. He had several credit cards that were maxed out. He said he wasn't earning enough money. He was in a really difficult situation. So I started to have an email exchange with this gentleman, and from what I was gathering as I started to have this email exchange, it looked like he was going to need some serious financial coaching to be able to get him to the point where he would be able to pay off his debt and get back into a stable place financially. So I explained to him that that's one of the services that we offer, is that we offer coaching. And he balked at that. He said, "There's no way I can't afford that. There's not, I just can't do that." And I thought it was kind of interesting because I think a day or two after he explained to me that he was in this desperate financial situation and couldn't afford coaching, I noticed on his Facebook feed that he was doing a fabulous tour of cities in Florida. He lived in the Midwest. He was on vacation. He was in Fort Lauderdale, and he was posting pictures and videos about this great vacation he was taking in Florida, which I think is very interesting. This dichotomy of I'm in a desperate financial situation. I need you to help me. I need you to give your time to me for free. I need a service that you provide at a cost. I need you to give it to me for free because I can't afford it, but I'm going to go on vacation. It would be very similar to someone coming to you and saying, "Hey, you know what? I'm really struggling financially. Could you help me out? Could you lend me $50?" Right? And you lend that person $50, and then let's say that weekend you're out with friends and you're out at the bar, and all of a sudden you see the person that you lent $50 to buying rounds of shots for his friends. How would that make you feel? It would make you feel like the person really had just taken advantage of you, right? And that was kind of the situation that I felt. We were in this situation, and it kind of lent to this idea that John and I, from all of the people that we coach, have found that the vast majority, roughly 95% of people, do not have an income problem. They have a spending problem. And it is their spending that oftentimes leads to the financial situation that they're in. Nothing wrong with spending. If you got the money and you want to spend it, spend on whatever you want to spend it on, right? As long as that is bringing you some sort of enjoyment or long-term happiness in your life. But if your spending is putting you in a financially struggling situation or a perceived financially struggling situation, it's not really fair then to turn to other people and say, you need to take care of me because I can't take care of myself.
Right, and there seems to be this somewhat cognitive dissonance we've noticed in the gay community, and David Ray talked about this in a Forbes article. David Ray has been on the Queer Money podcast several times. Most recently, we covered him on the Queer Money follow-up series, both episodes 10 and 25. He's a financial planner out in LA, and his predominant practice is of LGBT people, and there's sort of this dissonance in the LGBT community where what he terms gay money dysmorphia, where we sort of think we're rich and successful, but even though we're on the brink of financial ruin. And we're going to talk about this a little bit in more detail on episode 252 of the Queer Money podcast, coming March 9th, when we interviewed Paul Donovan, who is the chief economist for UBS. And he talks about how credit cards and low minimum monthly payments for pretty much everything that we use and have today sort of obscure the wealth gap and the pay gap that the LGBTQ community faces, not too dissimilarly to the pay gap for that women face. And it's having access to credit kind of allows us to live a bigger lifestyle than we could afford if we could only have a lifestyle contingent on our income.
Right.
And we see that a lot in the LGBT community, and we've noticed it. David Ray's noticed it, and we know that other personal finance experts have noticed it. But it seems to be an ongoing problem that our community has.
Well, I think it's not necessarily just the LGBT community, but you think about, you can be in a neighborhood of predominantly nice homes, right? And you can look at two homes side by side, and the reality is that one couple or one family can be living in one house, and they make enough money to make their payments on their house, to cover their expenses, to save a little bit of money, and they're doing it all with a financial financial stability. And then you can have a house right next door, right? And that house, all of this stuff that they own is on credit. They're maxed out with all of their loans. They refinance their house every 2 to 3 years or whenever rates drop so they can try to lower their payment, but they keep kicking the can down the road when it comes to paying or accumulating equity in their home. And when you would look at the two, you would think to yourself, oh, well, these families are probably pretty similar, but one family could easily be earning $20,000, $30,000, $50,000, $100,000 a year more, but because of access to credit, whether that's loans or mortgages or credit cards, they look exactly the same.
It obscures things.
It does obscure things, and I think what that would may end up causing to happen is that you look at somebody and you think to yourself, oh, they're okay. They're financially successful. And I think that's one of the things, we've talked about this before on the podcast and here on the Queer Money follow-ups, that there is this perception especially I think in the straight world, of gay men being fabulous and financially successful because of the way we spend our money. We spend our money predominantly on things that are things that the straight community in general doesn't have as much money to spend on those kinds of things, because they are paying for kids, or they are paying for a house that is for a family. They have all the responsibilities that are associated with their lifestyle, and we don't necessarily spend money on those kinds of things. We spend more money on temporary things. And because of that, I think that there is a perception that we just have this amazing flow of cash and that we're just wealthy individuals.
And we've talked about that a lot. And I think that's definitely a true perception, as we've seen from various studies. But we've never talked about, and maybe this is something that we should look into, but while those are folks from outside the community looking at the LGBT community saying, oh, this is everything. It must be fabulous to be a gay man because you have all this extra money and you can spend all this and do all this extra stuff. I think that sort of happens within the community itself. So I think
that's true.
As a gay man myself, I'm looking at all my peers and I'm thinking, wow, everybody's doing it fabulously. And I look at my bank account and I'm like, well, my bank account doesn't necessarily, I couldn't afford to do what they're doing. And so there's this cognitive dissonance within the community itself. It's not just those looking into the community from outside. It's us inside being like, everybody else is doing way better than me. And I think that adds to not only our financial anxiety, but I think it also adds to our kind of plays on our self-worth, because we assume that everybody else is doing better than me, but and clearly when I look at my bank account, I can't keep up with them.
Right.
When that's actually not the case. More of us are struggling than would like to admit, and if we would talk about that more openly, maybe people would be a little bit less anxious, a little bit suffer a little bit less depression, and maybe start tackling some of these things that we talk about.
Right. It's kind of similar to the quote that we referenced. The thing I like to say, if you don't have enough money to afford the big things in life, you must enjoy the small things. But if you enjoy the small things too much, you will never be able to afford the big things. And I think that that's maybe one of the perceptions that is happening. And maybe the example of this gentleman who was having this email exchange with us is that he was enjoying small things in his life on a regular basis, and felt like he couldn't afford paying off his debt. He couldn't afford getting ahead financially. And so he needed help. But the reality is that maybe if he made some changes to the way he spent on smaller stuff, he could afford some of the bigger stuff.
Right. And to be clear, spend your money how you want. Live your life with style on minimum monthly payments all you want. Max out your credit cards, but then be aware of what that's doing to you.
Right.
And if you get to a point that you're stressed out and you're asking other people to help you out, if you're asking other people to donate their money, expertise, and time on your behalf, then you might be kind of there's something going on there, and it's
right.
not up to everybody else to sort of to help you fix your mistakes. People can help you for sure, but don't ask them to kind of sacrifice themselves.
Right.
So what we're going to share about, you can obviously listen to episode 49 or go to find extra money at debtfreeguys.com to get those tips on how to save money, easy ways to save money. Right now, what we're going to talk about are sort of three macro approaches to saving some money, ways to sort of look at your finances. And we've kind of put them into three buckets.
Yeah.
The first being is maybe start with the most effective way to save some money. And that is to look at what we call your big expenses. Now, your big expenses would be your mortgage, or if you're don't own a home, your rent, your car loans, maybe even in some cases cell phone plans, especially if you're more than one individual. Look at those big expenses and see what can you do today to lower those expenses. Like even today, interest rates are still at historic lows. So is there a way for you to refinance in such a way that makes the closing costs worth it?
Right.
You can also, and lots of people aren't aware of this, but you can refinance your car loan. We've done that in the past, and that helps us significantly. When you do stuff like that, you want to lower your rate and not extend out your term and pay
Right.
more in the long run. But that's probably one of the most effective ways to affect your expenses. We do know individuals who have sold their houses and downsized.
Right.
That's an extreme approach. I can think of two families off the top of our head.
I just shared an example, an article into the Queer Money Facebook group of a couple who has a little boy who recently decided to buy a motorhome and fix it up inside. It's actually very stylish inside, but they fixed that up, got rid of their home and their car, and were able to pay off $180,000 in combined debt between what they had for their car, what they had for their leftover from their home, their student loan debt, their credit card debt. They eliminated all this debt by taking some major steps, right? And I think that we all get kind of this fear of what's going to happen? What are people going to think if I downsize, right? If I move to a smaller home, or if I move to a smaller apartment, or I move to a neighborhood that isn't the most fabulous neighborhood, or I get I go from having a Lexus to just having a Toyota, right? People are going to think that something's wrong with me? Well, then just reinforce with them, if they're going to have those thoughts, just say, hey, I'm working on some fabulous financial goals. I'm going to feel great when I'm done with it. And this is the reason why I'm making these changes. It can actually be empowering.
Yeah. And I would argue, similar to our experience and those people that we've coached, that when people are honest about their financial situation and the changes they're going to make because they want to reach certain goals, lots of people in your life kind of feel the same way. I think most friend groups, most families kind of want somebody to finally say, look, we can't do Christmas like this anymore. We got to take a break. I mean, we did that how many years ago, and our family hasn't spent that lavishly since. And everybody, including our retired family members, appreciate that.
Yeah.
The kids still get gifts, but not everybody else needs that.
Yeah.
So anyway, that before I go off on a tangent, so that's the first macro way. The second macro approach is to look at your major expenses. Now, we've talked about this several times before, but for most Americans, the quickest and most effective way to save the most money is to get control of your grocery and dining out budget.
Yeah.
Americans just spend a ton of money on food, dining out, and groceries combined. And if you're able to rein this is definitely the case for us.
Yeah.
If you're able to rein in your spending on groceries and dining out to any degree, that's just that much more money that you can use to put towards other goals or to pay off debt.
Yeah. I think that it is interesting. Several surveys have shown that dining out is one of the top 3 spends in the LGBT community. Mm-hmm. And at the same time, there's at least one, I think 2 studies that have shown that LGBT folks, more than half of LGBT folks admit to overspending on things that they know that they shouldn't. So it's kind of interesting. We know that we're overspending. We're spending on things like dining out or vacations or things like that. And we're still kind of feeling like we're not happy enough to get to live the life that we want. But maybe if we were to reduce these kinds of spending or this kind of expense, like we did, like we really cut back on our food and dining out and alcohol budget when we were paying off our debt, it led to a much happier life when we paid off our debt. The interesting thing in the Facebook group, when I posted that article about making major changes in your life, I asked, has anyone ever done anything extreme to pay off debt? And several people were commenting about how they weren't making extreme changes, but they were making changes that allowed them to pay off their debt or to be able to reach some financial goals.
Right. Nice. That's cool. We've been doing a lot of research and education on hedonic adaptation, and I think this to me is a great corollary to that. We think that these things that we buy only provide us short-term satisfaction. They don't necessarily provide us long-term joy and satisfaction. And then if we're doing this, if we're financing a lot of this, that only adds to the pressure of of these things that are providing us short-term enjoyment. So if we focus more on what's most important to us, the few things that are most important to us, rather than kind of doing all this crazy spending in areas that don't necessarily provide us that much long-term satisfaction and arguably detract from our quality of life, that much better.
Yeah. All right. And then number 3, look at those pesky small expenses, things like subscription services or the ones that come around once a month. I like to go through our accounts look through it every month, and I'm looking for kind of those reoccurring expenses or things that we do ourselves that are reoccurring that we could say, you know what? We don't really use that service. We can get rid of that. Or we do this often, but it's not really something we really enjoy. We kind of just do it or doing it out of habit. Those kinds of expenses can really then add sometimes $20, $50, $100 back into your monthly budget, which would be great for if you're trying to pay off debt or if you're trying to save for, create that emergency savings, or putting it towards something that has a little bit more value to you, right? Just switch it to spending on something that is a little bit more important to you.
Yeah, I can think of two members of the credit card payoff course who have both gone through all their expenses and saved several $100s, if not close to $1,000 a year, by getting rid of subscription services that they either were no longer using or they didn't get that much value. And I can think of, for example, ourselves. Every now and then we download that app and pay that $3 or $5 for a fancy app because we need
the
it
one
for
that looking at the stars,
a particular situation, but then you don't actually use it. But then 3 or 4 months later, you've now made 3 or 4 payments and you haven't used it that much.
Right.
Those are the kind of things that we're talking about. You kind of become desensitized to these pesky expenses because it's only like $3 a month or $5 a month, and so you just don't pay that much attention to it. So these are our suggestions. Look for all the minor ways to save money by going listening to episode 49 of the Career Money Podcast, or going to debtfreeguys.com and searching for Find Extra Money. But for a macro way to tackle your expenses, look at those large expenses, look at those major expenses, and then look at those pesky expenses.
Right.
Then thank you for joining us for another Career Money Follow-Up. Here's your Career Money Follow-Up takeaway from this episode. Get your free guide of the 5 building blocks of a happy gay life at debtfreeguys.com/happy. Then in the comment section below, let us know what expenses you've cut recently, whether you've cut it out completely or even just done a fraction of a cut. We find that sharing these kinds of discussions or sharing these kinds of practices actually helps other people because it inspires them to do other things themselves. Yeah. Then join us tomorrow for Career Money. I can't believe it. Career Money follow-up number 50. We're 50 days into doing this.
Right. We've done this every single day for the last 50 days so far.
It's crazy. We're going to be up on a year soon. And that we're going to talk about the path to early retirement. And who doesn't want to retire and retire early?
John doesn't mean that we've been doing this for a year. Covering a year full of Queer Money podcasts. When we reach 52, we've covered the first year of Queer Money podcasts. Yes, exactly. But we've only been doing this for 50 days. He doesn't truly believe that 50 days equals a year.
Sometimes during COVID, it can feel that way.
Yeah.
Lastly, but not leastly, as always, please give this video a thumbs up with whatever channel you're on. Subscribe to this YouTube channel, and then click that bell on YouTube to get notifications when we upload new videos or when we start these discussions, because we would love to have you part of them. Thank you, and we will see you tomorrow.
Have a great evening.